Hi, I'm Rosemary Miller, and welcome back to our daily crypto show where we talk about all things crypto, news, market updates, and so much more. On to the markets, which can be found on Forbes digital assets. It shows the currency, the token's impact score, the price, and its 24-hour change. The crypto market cap is a little over $1 trillion, which is up roughly 1% over the last day. Bitcoin is in the $23,000 range, which is up a little over 2% for the day. And Ethereum is currently around $1,500 today, with less than 1% difference over the last day. On to our leaders and laggards, which can be found on our Forbes Digital Assets dashboard. Our leaders, Cosmos, is at $11, up almost 10% over the last 24 hours. Polygon's Matic is roughly 92 cents, up almost 6% after launching its new scaling solution yesterday. And Leo is $5.36, up almost 2% for the day. On to our laggards, we have Luna, less than half a penny, down almost 7% on a daily scale. Theta Fuel is almost 6 cents, down roughly 6%, and Internet Computer Token is $6.85, down almost 6% for the day. Diving right into the news, Elon Musk said Tesla sold 75% of its Bitcoin holdings during Tesla's second quarter earnings call after yesterday's market close, adding $936 million in cash to its balance sheet. Musk says Bitcoin is a sideshow to a sideshow and isn't something they think about a lot. But he also says the sales shouldn't be taken as a verdict on Bitcoin, and he's open to increasing Tesla's holding on the cryptocurrency in the future. So this is a really big blow to the crypto community. I mean, think about how alienated they must feel. The crypto community, they rallied so hard for Elon Musk with his Twitter deal, and just last summer, his tweets were singing a different tune. So Musk said, "I might pump, but I don't dump. I definitely do not believe in getting the price high and selling or anything like that. I would like to see Bitcoin succeed." Well, you guys, we see how that worked out. Elon Musk, he sold Bitcoin in the $20,000 range. Bear in mind, the highs are $69,000. He also tweeted that Tesla had diamond hands, which is a reference to not selling due to price fluctuations. Anyway, the billionaire hasn't sold any of his Dogecoin, and while we're speaking of Dogecoin, Doge had its latest upgrade, which was just released. It introduces security updates and changes to network efficiency. As you see here, the Doge token has seen some pretty volatile trading in the past 24 hours. And in other news, the latest crypto exchange to cut its staff is blockchain.com. The reduction comes to 25% of its workforce, which is about 150 people, because of harsh bear market conditions. We've seen this just yesterday. Gemini cut more of his staff. This is their second round of layoffs. Anyway, the exchange also revealed it was dealing with a $270 million loss from lending to the collapsed crypto hedge fund, Three Arrows Capital. In addition to the layoffs, blockchain.com said it's closing its offices in Argentina and canceling expansion plans in several countries. It's also shrinking its institutional lending business, halting all mergers and acquisitions, and pausing its gaming expansion, and slowing its NFT marketplace. So the executives will also be reducing their compensation. As for the impacted staff, they'll be offered severance benefits, which will be offered depending on the country. South Korea's planned taxes on crypto earnings have been delayed by 2 more years, according to a 2022 tax reform plan announced on Thursday by government officials. The development comes after the country's legislators in December delayed initial plans to tax virtual assets until 2023. So in 2025, gear up, South Korea, you may be in for quite the tax. On to the NFT world. We have Minecraft banning NFTs from its games. So as we know, Minecraft is a pretty big deal. A lot of us grew up playing Minecraft in our childhood, and it's one of the most popular games in the world, and many metaverse companies turn to Minecraft as a perfect model for the future of the metaverse. So banning NFTs from one of the most played games in the world is a huge blow to the metaverse and raises the debate again on whether NFTs should or even could be used in video games. So Minecraft's developer Mojang said to ensure that Minecraft players have a safe and inclusive experience, blockchain technologies are not permitted to be integrated inside our client and server applications, nor may Minecraft in-game content such as worlds, skins, persona items, or other mods be utilized by blockchain technology to create a scarce digital asset. The company did acknowledge the potential benefits of introducing NFTs, such as in-game collectibles and play-to-earn style rewards, but it also pointed to its drawbacks, saying NFTs are not inclusive of all our community and create a scenario of the haves and the have-nots. The speculative pricing and investment mentality around NFTs takes the focus away from playing the game and encourages profiteering, which we think is inconsistent with the long-term joy and success of our players. Up next, I had the pleasure of sitting down with Omid Malekan of Columbia Business School to discuss the overall crypto industry.
All right. So thank you for joining us today. And as we know, the crypto world is in shambles from the after effects of Luna, Three Arrows Capital, and recently Elon Musk saying that Tesla sold 75% of its shares of Bitcoin. So what does all this mean for crypto? Like, is this a moment of survival of the fittest in the crypto world?
I think so, yes. And perhaps in a good way, because those of us who've been around this industry long enough know that whenever there's a bull market, there's a tendency to get carried away. Too much optimism, too much speculation, and that ends up becoming a distraction from doing the important work of actually building the infrastructure, educating people, figuring out thorny issues like governance. And while on the outside, the events that you describe have all generated a lot of negative headlines, which in the short term then become a headwind. I think the good thing is that they force those of us who still believe to really focus on what matters.
Okay. So what would you say to crypto skeptics at this time? I'm sure you've had a lot of these conversations recently.
I have, and I would tell them that doing something that's truly transformative is hard and by definition messy. So while there are a lot of things in crypto that to someone on the outside might look like it's just a complete negative, I think this is just part of the process of experimentation and innovation. And there's certainly, like any other industry or technology, there are bad actors, there are bad people, there are a lot of bad ideas, but we as a community sort of have to go through the bad ideas because somewhere in there are these gems that end up being really transformative for society at large.
Okay. But I feel like, if Web3 is coming, right? Web3 is coming, blockchain technology will be the backbone of Web3, and crypto is also built on blockchain technology. Because of this, crypto really isn't dying in my mind. Like, crypto isn't dead, but it's also really hard to believe that all these hundreds of coins are still going to thrive. And what do you think? Like, what do you think it's next for crypto? Like, do you believe we're only going to have like 10 cryptocurrencies, 20 cryptocurrencies, 100, or are we still going to have all these thousands? Is this just like a bubble that's soon to pop?
I think we will ultimately have thousands, if not more, of different coins and tokens, but 99% of them will not be the ones that are around today. And that's not any kind of like doomsday prediction. The nature of, first of all, in every industry, most startups don't make it. That's just a fact of life, right? Like As I look out across the New York City skyline, there are probably many people opening new restaurants and cafes right now, and a bunch of them will not make it. That doesn't negate the idea of a restaurant or a coffee shop. And there is a long history with new transformative and tech-driven industries where most of the pioneers don't make it. Those of us who are old enough to remember the early days of e-commerce remember that, like there was a time when pets.com was something of a punchline of a joke for a bad idea. And now buying online pet supplies is a multi-billion-dollar business. So I think crypto will go through a similar evolution where a lot of the projects out there today are just not going to make it. Maybe it's too soon, maybe they're badly designed, maybe their teams are incompetent, but the Web3 philosophy calls for this token-enabled model for everything from money to corporations to existing services like social media or rideshare. And to the extent that anyone thinks those Web3 approaches will work, then they're all going to have a token or a currency.
Okay, so what do you think the media is missing in regards to crypto or the current climate we're in with crypto?
I think one of the most important things to remember is that total transparency is one of the features of this world. And that's true for better and for worse. So what I mean by that is that everything in our world is open and public for everyone to see. Like you and I could go to one of countless websites right now, and we can actually look at those thousands and thousands of different tokens that you mentioned, some of which are really just startups. Many of them are pre-product startups. In a traditional setting, you don't see shares of early startups trade. If you did, there would be just as much volatility and overall craziness as you see in crypto. And I'll give you two very simple examples. WeWork and Theranos. Those were both high-flying tech Web 2 players that went up a lot in value and then completely collapsed in value in a short amount of time. It's just that their shares don't trade. They get exchanged between like private investors and VCs once every 6 months. Same thing, by the way, with all of those restaurants and cafes that I mentioned. If they issued equity right off the bat, that equity would be very volatile. And then some of it would go to zero. So all of this is a roundabout way of saying is that the transparency of our world exposes everything, the good and the bad. And then when you have a period of prices falling and things correcting, that transparency makes things look worse than they actually are. But to me, the key takeaway is that transparency is a force for good.
Okay. And I hear you have a new book that's out. Could you tell me a little bit about this?
Yes, the book is called Re-Architecting Trust, The Curse of History and the Crypto Cure for Money, Markets, and Platforms. And it is a different kind of crypto book. A lot of people, when they talk about crypto, like to espouse on the potential benefits down the road. And my book has plenty of that too. But I wanted to look at multiple applications like money, payments, banking, social media, rideshare, through this lens of trust, because I think that's something that everyone can relate to. I think also most people would appreciate the idea that whether it's like what's going on these days on Facebook or what's happening with inflation, a lot of our existing trust frameworks are not working in the digital era. So in my book, I explain how the world came to be the way it is, why trust matters no matter what technology you use, and how some version of blockchain and crypto could be used to improve trust for multiple applications.
Well, thank you so much for agreeing to do this interview with me.
Thank you for having me.
Thank you all so much for joining us, and don't forget to follow us on Twitter @Forbes Crypto, and feel free to send me any tips at Rosemarie TV.